Hello and welcome to Capital Market Live on Channels Television. I'm Will Libong here in Lagos. First things first, let's check in on the markets. We begin in Europe, where stocks weakened on Friday, wrapping up another volatile week for markets amid fears over the direction for central bank policies. UK FTSE 100 fell 1.17% on Friday, and France's CAC 40 closed lower by 0.82%, while the German DAX dipped by 1.32%. It marks the fourth consecutive week of losses for equity markets in Europe, and the first time this has happened since March 2020. Earnings were a key driver of individual share price movement on Friday. Markets have whipsawed throughout the week as investors reacted to the first indication on Wednesday that it could soon raise interest rates for the first time in more than 3 years, and to rising geopolitical tensions between Russia and the West over Ukraine. Now to Asia, where stocks were mixed on Friday following a volatile session on Wall Street overnight, where investors reacted to comments from the Federal Reserve and the U.S. GDP data. The Nikkei 225 in Japan gained about 2.09% to close after falling nearly 3% on Thursday. Mainland Chinese markets fell as the Shanghai Composite slid 0.97% to close, while Hong Kong's Hang Seng Index declined 1.08%. Now to the U.S., where stocks rallied on Friday to wrap up a rollercoaster week boosted by rebounding tech stocks. The Dow Jones Industrial Average rose about 1.7%. The S&P 500 added 2.4% to close at 4,431.85 points, its best session since June 2020, while the Nasdaq Composite rallied 3.1%. Shares of Apple jumped nearly 7% after a stellar quarterly result, boosting the stock averages. The company reported its largest single quarter in terms of revenue amid supply challenges and the lingering effects of the pandemic. The Dow finished the week 1.3% higher, and the S&P 500 added 0.8% on the week, breaking a 3-week losing streak, and the Nasdaq Composite finished little changed week to date. Back home at the domestic equities market, the bull continued to dictate proceedings on the local bourse as the gradual release of corporate earnings boosted buying interest in dividend-paying stocks. Accordingly, the all-share index rose by 0.55% week on week to close at 46,205.05 points. Notably, buying interest in Ecobank Transnational Incorporated, Guinness International Breweries, Airtel Africa, and Total Energy spurred the weekly gain. Activity levels were weaker than the prior week as the trading volume and value declined by about 22% and 59.8% each week on week. A quick look at the sectors. We see the banking, oil and gas, and consumer goods indexes recorded gains, while the industrial goods and insurance indexes closed in the red. This week, the banking and oil and gas indexes both hit a 52-week high. Now, Ecobank Transnational Incorporated topped the gainers chart for the week, while C&I Leasing PLC led the decliners. The three of GTCO, Codville Business Solutions, and Chams contributed 21.27% and 15.05% to the total equity turnover volume and value in the week. Now to the unlisted equities market, the NASD OTC Securities Exchange Index closed the week on a positive note as well. The NASD Securities Index increased by 0.17% to close the week at 742.82 points. However, volume of trades for the week decreased by about 99% to 4.99 million units when compared to the previous week, while value also fell by a similar margin to settle at 115.14 million naira. Central Bank Securities Clearing System was the only advancer for the week, while NASD PLC led 3 other laggards. Meanwhile, NASD PLC and Dufil Prima Foods PLC topped the trades by volume to close the week. To the fixed income markets, where the bond market was mostly bullish this week with few bearish trading sessions in the week. At the close of trading on Friday, the market closed mixed. Overall, average benchmark yields closed at 11.53%, with benchmark yield falling by 2.17%. The Treasury bills market was quiet this week, although with some massive interest seen on the April 2022 maturity. At the close of trading on Friday, the market was bullish, with buying interest seen on both the Treasury bills and the OMO bills. Average benchmark yields for Treasury bills fell by 1.1%, while yields on the OMO bills also fell by 0.53%. Now, joining me on the show to discuss key developments in the capital market during the week is Mr. Ikechukwu Onyenwe, Group Head, Treasury and Structured Products at Main Street Capital Limited. Thank you for joining us on the program, Mr. Ikechukwu.
It's indeed a pleasure to be here.
Yes, January has been a fantastic week, probably a fantastic month for equities. The equities market has maintained a positive posture, and we've seen it crossing the 46,000 level. That's a huge milestone. What does it represent for the market?
That's a very good observation there. Let's put it in proper perspective. The market, the all-share index, printed 45,455 sometime in January 2018. And that has been the psychological resistance all up until now. So for market to break out of that psychological resistance shows that we still have one more trading day, that's Monday. So we're hoping that the market will settle above 45,455 points. And when that happens, it means the psychological resistance has been broken out of, and it becomes the new support.
So you mean that what we have now, we shouldn't be celebrating yet? We shouldn't be popping the champagne to say we are at the 46,000 level? Because I'm really thinking we're going to count down to 50,000 anytime soon.
You're not totally wrong.
Okay.
So the markets will close on Monday for the month, that is. Before now, we saw that during the course of the week, market did 46,900 and eventually settled at 46,200. Now, we expect the market will settle above 45,455. And once that happens, the psychological resistance has been broken, and 45,455 becomes the new support. Now, once that is established, we are exposed to 50,165. That is a new psychological resistance once market settles above 45,455. And that was actually set sometime in October 2007. Although market eventually rallied to an all-time high, the peak of our market, 66,500, and that was in March of 2008. But for now, in our clear view, is 50,165. Once market is able to trigger and break that, then 66,500 is exposed.
That's a good one for equities market. But let's quickly just flip back and talk about the fixed income markets. We're seeing the performance in the market. There's been a downtrend in yields. It has been on the bullish side. Just few bearish trading sessions like we saw in the report. But the NTB auction is a very good example of where we saw a drop in rates. Now, what does this do for the markets, and how should we be looking at this, investors and analysts alike?
Let us clear this first. The fixed income market has been trapped in a range for about 8 months now. And whenever you see market trapped in a range, all it simply tells us is market is looking for direction. General market sentiment is that the fixed income market yield should be ticking northwards. But that is not happening. And so that is why market is range bound. So we expect market to either break out or break down. But because the general market sentiment is that yield should actually tick up, then we expect that markets will tick up. So what you are seeing now is actually as a result of the oversubscription, the liquidity that's in the system, and the fact that allotment came to, CBN offered about 129 across 3 maturities, but ended up selling only about 225 across maturities. So what that tells us is, and the total size of the subscription came to about 476. So that leaves another 251.
Unmet.
Unmet, exactly. So, and once there is demand and no supply, the funds that were unmet, the one taken out from the market, would definitely find its way into the secondary market. So once they went to the secondary market, they started mopping up. And that is why you saw the yield at those low levels.
So we can attribute this returns, these negative returns. Is it that there's too much liquidity? Because we're seeing that even the last OMO auction that was conducted, CBN offered 40 and took away, and allotted 40. So what's the deal there?
Indeed, there's surplus liquidity in the market. So we can actually say that, and that is the reason why you have demand for instruments. Once these monies are in the system, these surplus are in the system, they will definitely look for assets to buy. Let's not forget, during the course of the week, FAC, about 420 billion. Then we also have FGN maturity, FGN bond 2022, January 2022, about 605, and the last coupon on it came to about 49 billion, and Treasury bill as well as OMO that you mentioned. So some of these things were not totally met. So the system is awash with liquidity. But we expect that during the course of the week, CBN will definitely come up with the CRR to mop up this excess liquidity. And so we'll see that reflected in OBB and overnight.
Okay, so I saw that maybe like OBB contracted during the week. There's been some contractions as well in that space, and well, hoping that all. Now, moving back to equities, because everything that happens in fixed income markets kind of finds its way to affect the yields, the interest rates in equities market, because when there's the low yields here, people run into the equities market. Now, we saw that industrial goods counter did not do so well, you know, at the end of the week, even though we saw some developments, major developments in that space. You know, Dangote Cement completed the second tranche of the share buyback program, and also Boa Cement also, you know, was president commissioned a new cement factory in Sokoto. That's a line for factory. That's a fourth factory in that state. Now, I want to know, how does Boa Cement's business expansion feed into the bigger picture here? Because we're supposed to see some boost. Dangote declined. Boa Cement, well, there was some reaction, positive reaction on Thursday when that news came in. But there's not been so much, you know. So how does this feed into the bigger picture?
Okay, so let's look at it critically. Industrial goods dropped by like 5.39% during the course of the week, whereas the other tickers were up. Banking stock 4.84, oil and gas 3.53, and all of that. Now, the second tranche of the share buyback was done by Dangote. Despite the success recorded, about 35 billion exchanged hands in this second tranche, Dangote still moderated from 284 to about 260. But on a weekly candle, on a weekly time frame rather, speaking technically, Dangote Cement is still very bullish. So it's just a mild pullback. Exactly. Then talk about Boa Cement. Now, Boa Cement commissioned is 3 million metric ton capacity outfit in Sokoto State.
Yes.
But how does that feed in? Now it has taken Boa Cement's total capacity to 20.5 million metric tons. Then next comes Lafarge. Lafarge WAPCO currently sits on like 14.5 million metric tons. And then Dangote is on 30.5 metric tons.
Okay.
So that brings the total capacity. If they're operating at full capacity, it brings the total production to 65.5 million metric tons. But what is the consumption in Nigeria? Approximately 31 million metric tons. So there is still a surplus of about 34.5 million metric tons. So the additional 3 million from Boa Cement only adds to the 34.5 million metric tons. That is the excess supply. But that is if they're acting in full capacity. So right now, we expect that once the supply outstrips the demand, then the prices should come down. So the fact that the prices are still on the high simply tells us that they are not operating at full capacity. Little wonder the CBN governor recently talked about producers of cement working down on their cost so that the masses can benefit from it. With the figures, that should actually be the case.
So with the figures, we see that this week, as in we were talking about all this influx of expansion, now corporate earnings are just coming in. You know, we're seeing Boa Cement release the earnings. MTN released the earnings yesterday. Julius Berger. So many earnings have come into the space now, and investors. Would we say that the reason why we're seeing the rally is because people are positioning for a dividend and trying to, you know, take profit where they can?
You're absolutely correct. Solid numbers. These are numbers, and they are backed by fundamental, real fundamentals. So, for instance, let me talk about Okomo Oil. Okomo Oil printed fantastic numbers. Their turnover grew by like 60%. Their comprehensive income grew by a whopping 93%. And their EPS grew by like 80%. So that means shareholders are even primed for very good dividend.
So before we let me just quickly talk about one thing I want to say, Airtel Africa. Airtel Africa was phenomenal this week. And we saw it contributed, it was a major contributor to the equities market. And it became the first company in Nigeria, well, listed on the NGX, to surpass the 5 trillion naira mark. How did this happen? Well, and what are the factors driving this? Just tell us about that.
Okay, so currently Airtel will be listed on FTSE 100.
That's a FTSE 100.
The index in London on Monday. And apart from that, they have something else working for them. Sentimentally, their parent company, Bharti Airtel, Google has invested about $1 billion, and it's hybrid actually, 700 million in equity, 300 in some comprehensive partnership. Now, what that does is it would increase the sentiment of that stock. And once this news filtered into the market, then there was this rally. And like I rightly alluded to, once that happened, it was on full bid. It became the most capitalized or the most expensive.
And it overtook Dangote
now. It overtook Dangote. So currently it's at 5.4 trillion in terms of maturity.
Hold that. We'll quickly take a break now. And when we come back, we'll continue the conversation. And that's in a moment. Do stay with us. This is Capital Markets. Welcome back. If you're just joining us, this is Capital Market live on Channels Television. Now, during the week, the Central Bank Monetary Policy Committee held its first meeting for January this year, 2022. Now, in contrast to monetary policy normalization approached by major global economies, Nigeria's monetary policy has retained all existing parameters with the lending rate at 11.5%. The Central Bank Governor, Godwin Emefiele, who announced the committee's decision, says the dovish stance will strengthen its efforts on price and monetary stability for economic growth. Now, let's take a listen.
What caused the policy normalization in advanced economies is because of rising inflation. And I must say that it is the truth that inflation has attained unprecedented levels in these economies. But for us in Nigeria, our challenge is not just inflation, but also growth. And this is a policy we've been adopting in the last 2 years. And if we feel that this policy is working well, there is no reason for MPC to begin to contemplate a policy of tightening, because we see that we are somewhat moderately tightening the liquidity system through our administrative controls using CRR discretionary powers that we have. So I think that's the reason we feel MPC thinks that we will continue to do what we're doing now, because we believe it is giving us the results that we expect. Let's not forget, as a result of these policies that we've adopted, price stability that are conducive to growth, we saw a reversal from recession after 2 quarters.
Now, the CBN decided to, as you see, to keep all the rates unchanged. Does this really, what's the implication of this status quo, and is it really, really helpful for our economy, especially the markets?
Well, maintaining status quo only helped the capital market. We can see the activity in the equities market and also the activity in the fixed income market. All of this was largely because rates were held steady, just like majority of us expected. So the all-share index is moving up as a result of that. Because if they had hiked rate, then there will be a mass exodus from the equities market into the fixed income market. So now, as a result of liquidity, they are investing in the fixed income market, and that is also driving yields down. So equities market is up and the yields are down.
So the CBN governor also said that Nigeria will not be affected by the capital flow reversal, even as advanced economies like the US are planning or are going to tighten their monetary policy, since we did not benefit from the funds. Is that a good thing? Some say it's good, but is it good, especially for our economy that's not generating so much?
Okay, well, as at the 31st of December 2021, foreign investors' participation in our local market printed at 22%, meaning the local was at 78%. So we're not totally exposed to foreign investors. I guess that's what the CBN governor was alluding to. So, but are we out of the woods? I don't think so. There's a bit of a hawkish undertone in what he said. And so we expect that maybe come H2, interest rates will be touched. And we're looking at a hike of, say, 100 basis points.
Is this not going to put pressure on our forex, especially with the decline in forex reserve? It's around $40 billion at the moment. Is this not going to put more pressure on the forex reserve? Is this not a way of getting forex if we have more capital inflow into the country? Is this not a way of shoring up our forex reserve? If they move out or there's a capital flight, so what's going to happen? Because we don't have enough revenue generation in that regard.
So in all honesty, that is why we believe that come H2, interest rates will be touched, as in there might be a hike of 100 basis points. Now, this would help to attract foreign flows. We need foreign flows into the country. Now, we are currently experiencing inflationary pressure occasioned by the depletion of our foreign reserve. So the only way we can cut down on some of these pressures is when we have inflows in foreign currency, and that can only happen if our rates are up. And that way, they'll be encouraged to inflow funds into our economy.
Okay, so it's good to have foreign, investments in the country. We also talk about domestic investors. How many Nigerians are investing in the equities market? How many Nigerians are knowledgeable about the equities market? Do we have a kind of platform where Nigerians trade? What percentage of Nigerians actually participate in the capital market? Is this not what we should be looking at to see, if we can bring in a lot of more domestic investors and not depend on foreign investors, we could possibly be on a better standing? What's your take on this?
Well, it's a very valid point you've made. But don't forget, too, that we are an import-dependent economy, so we can't rule out the fact that we would need foreign currency at some point. Now, if we increase capacity building and help more locals trade our market, that's very good. And the numbers I alluded to earlier points to the fact that we have 78% participation locally. Yes, against 22% of foreign participation as of December 2021. So that's good. But because we're an import-dependent economy, we just have to look for ways to shore up our foreign reserve.
Now, speaking of foreign earnings, the Minister of State for Petroleum, Mr. Timipe, recently announced that the removal of the fuel subsidy was going to be postponed for another 18 months. And note that this is not according to what was stipulated in the Petroleum Industry Act. So what are the implications of this development for the capital market?
Okay, well, as of Friday, during the close of trading, Brent closed at $91. Now, that should be good for Nigeria. But it actually has its flip side. The higher the international oil price goes, then the more the subsidy will pay. Now, we were prepared. The budget made provision for the first 6 months, only for labor and others to kick against the removal of subsidy because it will heighten inflation. And the federal government has listened to their hues and cry and decided to push it further by another 12 months. Now, the implication of that is would continue to pay. Now, they would have to go back. Extra budgetary allocation will have to be made to capture that sum that will be used. And the more oil price keeps going up, the more we'll be paying out. And don't forget that we don't pay these subsidies in Naira. It's in USD. So what they have actually done is postpone doomsday. It will happen.
So
unfortunately, it will cross this current dispensation into another dispensation, and that becomes a different kettle of fish.
So what can we do? What possible solutions are there to avoid this? Because NNPC is already asking for 3 trillion Naira, a subsidy, payment. So, and they just recently received 5, billion Naira from the Afrexim Bank. So how are we going to stop? I know we can't stop the borrowings because we can't stop subsidy at this moment. So what are the solutions you would propose, maybe say, that would help alleviate or mitigate these sad events that we have seen?
Unfortunately, like I said, we're only postponing doomsday. Market watchers and analysts were excited when it was said that come July, H2, subsidies will be removed. And so we're also banking on the fact that the Dangote refinery will come on stream to help alleviate some of these problems. But with what is happening now, I think it would have been a lot better for the government to swallow this bitter pill now. Commit more funds to capital projects. Because what we're borrowing to do now is fund consumption. And that won't help the economy in any way. So they should have faced the capital project, infuse more monies into the system to fund capital projects. Gradually, we'll be able to pull ourselves out of the doldrums.
We have to leave it there. Mr. Ikechukwu Onyenwe, Group Head, Treasury and Structured Products at Main Street Capital Limited. Many thanks for coming on the show.
It's a pleasure.
And that's a wrap on Capital Markets. I'm Willie Bond. Do stay safe.